Brookfield, the financial conglomerate, is looking to faster international growth in its insurance and wealth businesses. That division helped boost earnings in the company's latest quarter. Distributable profit rising 27% to $1.5 billion US. Let's get more on the company's latest results from Christopher Ballard, Managing Director at Czech Capital Management. Christopher, thanks very much. Always a complex set of results. Brookfield has all these public entities, complex relationships with them. What jumped out in the quarter for you, please?
Hello, thanks for having me, Andrew. Yeah, it is a complex company with a lot of different moving parts, but you can strip it down and be very simple about it. Yeah, the 27% jump in distributable earnings is a very good number for us. We're very happy to see that it was at 1.5 billion of distributable earnings. What we do when we're looking at the company is we break it down to look at Brookfield Asset Management, which represents typically about half of their distributable earnings. We also look at Wealth Solutions, which is about a quarter of their distributable earnings. And then lastly, their operating businesses, which is a conglomerate of infrastructure, real estate, and the like, private equity. And that also ends up being about 25% of their distributable earnings. And all of these segments grew considerably, just like we wanted to. It's a very good flywheel that they have intact at this point in time. Brookfield Asset Management, which is a publicly traded separate entity, they own 75% of, reported 2 days ago, and those numbers were, they had 550 billion of assets under management that were fee-bearing assets. They actually manage over $1 trillion of assets, but 550 billion are in fact distributable, fee-bearing, and they have the ability to call other assets. Over $50 billion of assets is on the sidelines right now that's committed to them, where they can end up putting a phone call out, getting another 50 plus billion under management at any point in time when they feel the opportunity is right. And that then automatically goes to the bottom line, where Brookfield Asset Management earns 1% roughly of those fee-bearing assets. We're actually looking at that to grow to 1 trillion at some point, maybe in the next 5 years or so. So they're really on a really great trajectory at this point in time. We also end up looking at the Wealth Solutions aspect, which is very closely tied to Brookfield Asset Management, where they end up buying a lot of insurance products, mainly like fixed annuities. When they make those purchases, they then redeploy the capital into Brookfield Asset Management at much higher rates of return. So all these numbers looked really good to us, what we expected and even better.
And you touched on this, they raised another $25 billion US across their strategy. So there's enormous appetite among the institutions and pension funds, et cetera, that they team up with.
There is, yeah. They have great partnerships. Recently they partnered with France on building out the Eurozone's infrastructure. Recently this quarter, they partnered with Barclays on building out their payment platform. They also partnered with the likes of Deutsche Telekom, Microsoft, Intel. They have tons of partnerships across the board that they can partner with. And yes, because their returns on capital are so good, the endowments, pensions, sovereign wealth funds are interested in continuing to deploy capital into Brookfield. And when they deploy that capital, again, it's a commitment of about 10 years or so. So it's money that you can depend on as an investor to continue to come to them. They're uniquely positioned in the global marketplace for a variety of like the energy demand that is happening globally at this point, and AI infrastructure build out worldwide, as well as private equity starting to build or more and more build into the markets at this point. They continue to prove themselves across the board, which is why I think they can easily tap into another 25 billion. Absolutely.
And you may have touched on this, but part of their growth story here is growth and demand for artificial intelligence infrastructure. Is that through providing power, electricity for those, or actually building out these data centers?
Both renewable energy, like with Microsoft's partnership, that's because Microsoft's wanting to build out their own data centers, and they want renewable energy. So they've partnered with Brookfield for the renewable energy aspect, but they also end up helping with the build out of the actual infrastructure itself. They're definitely in both components of that.
And are they an interest rate sensitive story? I suppose that tends to increase their funding cost when rates go up.
For short-term investors, you consider it, an interest rate story of sorts. But Bruce Flatt and the team are very long-term oriented. So for them, they don't pay attention to the interest rates. At times, there's going to be headwinds and there's going to be tailwinds when it comes to interest rates. But they have a long-term focus where they're looking to deploy the capital regardless of where interest rates are, regardless of where tariffs are going to be. And they take opportunity. They take that volatility that's happening in the marketplace. They can take advantage of that with all the capital that they have sitting on the sidelines that they're willing and able to deploy. So in that sense, as a long-term shareholder, we're not worried about the short-term interest rate movements or inflation or the volatility in the market. We love how they end up approaching all of this. They continue to buy back stock in the quarter, by the way, which as a long-term shareholder is important to us. About $850 million of stock was purchased in the quarter. We'd love them to do even more of that. But when they're not doing more of that, we're assuming that they have other great investments to make, which we're pleased to see. And they also continue to pay out dividends. They raised a dividend last quarter, which are going to continue on throughout the quarter. So all of those aspects are reasons we're very happy and pleased to partner with Brookfield. And on top of that, we feel they're undervalued. I mean, if you look at all their publicly traded entities that they own, you can easily run the numbers on all of that. They're trading for about 20% discount for what their net worth is. And we think they should be trading for a nice premium to what their net worth is with the company growing as fast as they are.
Thank you very much indeed. Really appreciate your joining us. Christopher Ballard has been our guest managing director at Czech Capital Management. Coming up, we are going to